The conditional MCO for Kuala Lumpur, Selangor and Putrajaya has been extended for another 2 weeks until November 9th. This was announced today by Senior Minister Datuk Sri Ismail Sabri Yaakob during his daily briefing, adding that the decision was made under the recommendation of the Health Ministry. MOH's risk assessment found that there are still high-risk locations for COVID-19 transmissions. The country today hit a grim new milestone of 1,240 new cases, almost 75% of which are from Sabah, with 7 new deaths. On a brighter note, today's recoveries numbered 691. Malaysia continues to battle the third wave of COVID-19 infections amid an uncertain political landscape following a tense weekend where the King rejected Prime Minister Tan Sri Muhyiddin Yassin's request for a state of emergency. In response, the PM said that the Cabinet would hold further discussions on the matter and had chaired another special meeting today. The MCMC's move to freeze all new Courier service licenses for 2 years has been welcomed positively by the industry. GD Express Carrier MD and Group CEO Tiong Teck Lin told the EdgeMarkets.com that while the move would not impact GDEX, it is a good indication that the regulator is taking a serious look at the industry. According to Tiong, who is also the president of the Association of Malaysian Express Carriers, there are currently more than 111 players operating. However, he thinks that competition will remain stiff, with new startups backed by huge funds fueling their growth and volume by dumping prices. HLIB researchers Nazira Abdullah also thinks that the MCMC's move is positive for the industry. She says that Post Malaysia will remain the player with the largest network and that management had indicated an increase in volume during the CMCO. The MCMC today said it had frozen all new courier service licenses for 2 years, effective September 14, 2020 to September 15, 2022. AirAsia Group's Malaysian operations carried 36% more passengers in September compared with July, as it saw a rebound in air travel demand. For the same period, AirAsia India carried 79% more passengers, while for AirAsia Thailand, that number was 65%. The group's overall load factor increased 7 percentage points in July compared with September. For AirAsia Malaysia, it operated at 52% of its domestic capacity in September, in comparison with 40% in July, as restrictions on interstate travel eased. It carried 1.8 million passengers, achieving a 68% load factor during that time frame. While the conditional MCO in October has reduced capacity, AAM is striving to recover 60% of its pre-COVID domestic capacity by the fourth quarter. Of its affiliates, AirAsia Thailand managed to maintain its position of largest market share with a solid load factor of 65% and is aiming to operate at more than pre-COVID domestic capacity in the fourth quarter. New main market entrant Mr. DIY Malaysia ended its first trading day 9.4% up at RM1.75. It was the most actively traded stock on the bourse with over 410 million shares traded. After the bell, the stock was trading at around RM1.70, 6.25% higher than its IPO price of RM1.60. CEO Adrian Ong says the home improvement retailer is on track to meet its 900 store target, with its main focus being its Mr. DIY stores, with the secondary growth driver being Mr. Dollar and Mr. Toy brands of stores. Chairman Dato' Azlam Shah Alias says that the Malaysian market is growing, with urbanization levels being high and income levels rising. In terms of capital expenditure, Ong says its new stores would be funded using the strong cash generative capability of the group. He emphasized that it would also provide enough cash flow to pay sufficient dividends to shareholders. The group's dividend policy is 40% of its net earnings. GDB Holdings has executed a letter of intent concerning the receipt of a RM1.25 billion contract for the 8 Conlay luxuriated integrated development. In a boss filing, GDB says its subsidiary executed the LOI with KSK Lands Damai City with the mutual intention of entering a definitive agreement within 14 days. The contract sum excludes an additional provisional value of 15.86 million for stage performance incentive and has a duration of 32 months. In a separate statement, GDB said the contract is the largest ever secured by the group and brings its outstanding total order book to 2.27 billion ringgit. Group MD Chia Ham Che said securing the LOI for 8 Conlay is the pinnacle in its portfolio.